The broadcast is now starting. All attendees are in listen-only mode.
Good evening, everybody. This is Jeff Scott. Sorry I missed the last 2 weeks, but I'm broadcasting tonight live from my hotel suite in lovely Las Vegas, where I'm fortunate enough to be at a week-long trading extravaganza. I've got 4 days of a Traders Boot Camp with Derek Pilger and Magenta Trader, followed by the Traders Expo, and I'm very excited because I get to go and spend some time live in educational programs with John Person, Larry Williams, and also Gil Morales and Chris Catcher. So it should be a lot of fun. Hope to learn a bunch of new things. 2 weeks ago I was at the HGSI meeting. I'm hoping it wasn't the last one. If it was, it'll be a loss for all of us. And last week I played hooky. So I'm back. Hopefully continue this on a weekly basis. I'll do a live one maybe next weekend for the holiday. So we'll take a look and see. But just the basics. There's my email address if you want to get me. If anybody sees us that's live in Vegas at the meetings I'm attending, please introduce yourself to me and let me know that you get some value out of this or you don't. This is for educational purposes only. Any recommendations are in the spirit of education, not investment advice. I'm a doctor, not a broker, and most physicians lose all their money with their investments. And I'm not affiliated with any software vendor or trading company. The tools I demonstrate are those that I use in my daily trading, and I have paid for all the tools that I will be using tonight. I purposefully now hide my desktop because I had too many questions about this program and that. You can't tell my wife, but I've spent a lot of money on programs that I never use. What I really need, and if I was really tied to it with a small hard drive, I need a real-time charting program. It can be TradeStation or Thinkorswim. I have done a lot of paid for a lot of consultants on both programs to customize them to meet my needs. In fact, the reason why I keep TradeStation around is because I've got a lot of things there that are still TradeStation specific. I need something to do my analysis. High Growth Stock Investor, which I'll be using for most of this program, is my favorite end-of-day tool. It's got unique charting parameters, scanning, etc. EdgeRater is a tool that you can use for many different things, including to backtest some of the ideas that I might come up with in HGSI. I use it as a market timing tool as well as I do ETF Bandit. Seasonal analysis, that's what Magenta Trader is, and I'm out here because I want to learn more about it. But I am a big believer, although this year's been kind of painful if you're a seasonal trader. And then I rely a lot on Ian Woodward and Ron Brown. At no cost are Ron's weekend reviews, which I'll mention from time to time. Ian's blog, which is outstanding. And then at a fee, a newsletter and daily market updates. I'll spend a couple seconds here because if you're a beginner, you need to do your homework. And if you're a veteran, then you probably already know all these people. I've been influenced. It creates my style. My style is my style. It may not work for you. You may be offended by my style, but it's my style. And I got my style through education. I got it from Ian and Ron of HGSI fame. I got it from Alexander Elder, who taught me a lot about the psychology of trading and has his own unique indicators, such as force. I learned the basics from William O'Neill, and the basics exploded with Gil Morales and Chris Catcher. Trade Like an O'Neill Disciple. They have a new book coming, Trading in the Cockpit, coming soon. I'm a big believer that institutional volume drives price, and therefore I'm interested in anything that might give me a clue. Value and time is what I spent a lot of time learning about, and now I'm using some tools from Never Lost Trading. Van Tharp is, to me, the guru on position sizing and stop losses, and helps me keep from blowing out my accounts. Ronald Grunke, Show Me the Money, has a really simple approach and software tool to creating income in retirement off of collecting premium. And my favorite candlestick guru is Steve Bigelow. I will often say I consider buying this stock, but what does that really mean? The first thing is the market will dictate the performance of a stock or a list. The sector will add to the market as an important driver of a stock performance. Only if the market and sector are going in the same direction, then I might pull the trigger on a stock, whether it's short or long. Now, so when I say buy list, I'm accumulating a small maybe 40 stocks. That's not so small, but compared to 8,000 or 9,000 instruments, it's small, that I'm going to watch to see if they hit any of my specific setups. And if they hit a setup and if the market and the sector are going the right way, then I'm going to know what to buy and sell at a given time.
Magenta peak for SN page 500 on 12-minute
I use
chart.
multiple time frames, and I buy when my buy list triggers a setup, and I automate a lot of the different things that I do. And I use Thinkorswim and TradeStation with a number of different indicators that help me. So when I say buy list, it really should be potential buy list. As usual, I'll spend most of my time figuring out what the market is doing. I mean, I'm a big believer that that's really going to determine everything. I'll look at some top-down investing techniques that you can do through HCSI, looking at the state of the market, industry rotation, and stocks. I'll show you some of the shortcuts I might use. And then, as time allows, we'll look at a number of charts and some of the other programs that I use. Ian and Ron are the HTSI secret weapons, and their next meeting will be in March. We just finished the October one. I'm not sure the dates of the March one. Great meetings. It's something that I highly recommend that everybody consider. It's a low-cost meeting. They feed you, they entertain you, but most important, they educate you. Website, highgrowstock.com, free reports. Ron Brown are on there, which you can also get by going into this little box. And then they give you free trial software through the data feed. That data feed will feed other programs and export nicely into Metastock. My wife often asks me, why am I doing these? Well, one, because I like to. Two, it forces me to go through the market, the same analysis that I'll do on my own. And three, I really like these guys, and I'm trying to help them grow their base, because if I can grow their base, then we'll get additional folks creating tools that can help me improve my software, my trading, by improving the software. I always go to this slide because this is critical. In any instrument, from the market to the sector to the individual stock, I need to know where we are in the cycle. I think it's pretty clear that we've turned over and are in somewhere in the stage 4 sell cycle. Now the question is, are we in the beginning, or is this 8% or more correction that we've seen over the last couple of weeks, is that it? And are we about to pause, refresh, and go forward again? I don't know. I think this will be a very important week for the market as we start to get into what's seasonally a strong season, and we are extremely oversold. On the other hand, we still have Europe. We still have a fiscal cliff. We have a president that does not seem to be loved by the stock market based upon performance each time he gets elected on the following day. And we still have pretty much a stranglehold in Congress where neither party has enough to break through any of the filibusters or other stalling techniques. Why is that piece important on the pattern? Because you got to know where your market's trending. You buy in uptrends on retracement or pullbacks. You sell in downtrends on retracements. You buy at support when you're going sideways, and you sell at resistance. And that's kind of how you make money. You buy when it's low, and you sell when it's high. You sell when it's high, you buy when it's low. Sounds simple, it's not. And I don't want to assume that that it is, and I'm not trying to be joking about it. I know it's difficult. On the HGSI website, under the Learning Center, you'll see a number of webinars by a number of smart people, and a few by me as well, and additional information to help you get going. So on that note, my parting words before I jump into the programs: be your own guru. Investing is a business. Make sure you have the right employees, which is tools and software. Continuing education matters. That's why I'm in Vegas, getting my education. And you got to trade the market we have, not the one you think we should have. I don't put in market orders for tomorrow. I might put in orders that say, if the stock does this, then I'm willing to do that. But I don't know what the market's going to do tomorrow. Interestingly, or not interestingly, nicely, whatever the word might be, futures are actually trending positive right now. But those who've been in this market know that all it takes is one hiccup from Draghi or anybody else over in the EU, and the market will go the wrong way. So, on that note, let me close down my PowerPoint, and let's jump into the presentation. All right, so I guess I'm going to start with performance. So one of the first things that I want to do every Sunday, and I sit down and I do this every week, whether I do a webinar or not, is to get an idea if the stocks that I pick from, how they behaved versus the rest of the market. Now, this is a very simple analysis. It's called group performance analysis, which can be done in HGSI with just a couple of keystrokes. And on many of my other webinars, I've shown how. And what I want to do is get a sense of what the market did. Well, geez, red's bad, black is good, and it's pretty clear that you have two of my searches, Tim Higgin's and Top Robert Bongo's, were positive, and the rest were negative. All right, so it tells me it was a hard market week to make money. If I go down, if you have anything more than very, very super short-term holdings, I look at the S&P 500, which would obviously be a long holding, and we look at its performance. You can see that it was down 2.42%. I often like to look at the HGS 100 and the IBD 50, and to get a sense of where they were at, and you could see they were down about 1% less than the S&P 500, suggesting that high growth stocks might have been working better than the market as a whole. I have mostly a high growth stock portfolio, and it doesn't surprise me that I performed about the same as the HGS 100, which was better than the market, but not very good. Now, reality is, I don't think I held all my stocks. I certainly know I didn't hold all my stocks for the week. I had money management. I had some contra positions that wouldn't be factored in there. I had a lot of options trades, so I protect myself. But had I left the stocks intact, not done any money management, not bought any protection, I would have outperformed the market, but it was still a pretty ugly week. One of the nice things about the GPA is I can then break into all these different searches and see what stocks were found that did well versus the things that did poorly, and what was working, what was not working. All right, take care of that. So now that I've done that, I know that the market had a tough week. Now, another thing I can do, and I'm going to do this before I go into the program, is I can go into EdgeRater and do an extra report and look at the buckets template. Now, this is based upon the fact that we can slice up the market and look at where stocks are in relationship to the Bollinger Bands. They can be above or below, and we know that they're likely to go back into the bands because 5% above, 5% below of the time. So if they only spend 10% out of the bands, then they're likely to go into the bands after they've expended out. We also can divide up between the lower band and the top band into percentiles. And we know that in a bull market, about 80% of the stocks will be above 50%. In a bear market, it's the opposite way. We know that when a market is oversold, we might get a lot of stocks below the Bollinger Band. Here it's 13%. When a market is overbought, we might get a lot of stocks trading above the upper Bollinger Band. So this is looking at the S&P 1500, which we'll look at again in chart form, looking at the S&P 500, which are large stocks, 600, which are small stocks, and 400, which are mid-sized stocks. And you could see clearly a shift to the left, the majority of the stocks trading below the midline, consistent with a tough market week. And you could see that 13% are trading below the lower band. On Thursday night, we had over 20% below the lower band. So you could say, even though the overall numbers didn't change much, 74 to 76, there was some healing of the market with less stocks trading below the lower band. Now, as I try and understand what the market's doing, and I spend a lot of time, frankly, most of my time in my individual analysis looking at the market, is I usually go into my warehouse. I go down to Woodward & Brown user groups. I go to top-down analysis, and I get 20 leading indices, and I use this ranking by combo rank to try and help me get an understanding of the status of the market and where's the strength of the market. So I know certain things. When the market is bad, bonds are up, volatility is up, and the dollar is up. And all three of those things are sort of run counter to what the actual indices are doing. So if we look at, to start at the dollar, you can see that the dollar in a multi-day move up, but the dollar is about to come up to potential resistance, at the 200-day average. And it's no surprise that over the last 10 days or so, as the dollar has had a nice move up, this is the UUP power shares, that this has been accompanied by a fall in oil and gold, as well as the stock market. Now, gold actually started recovering, and we'll look at that in a second. So the dollar up is bad for the market. Volatility up is bad for the market. It's kind of chopped, but you notice that it has gotten above the 200-day moving average. If one looks at historic on the VIX, you can see that it's hit 45.50 in the past. Shut down a couple of my things so I don't degrade too much. Okay. All right. And that we're living at a very low rate. This is the weekly. And back to the daily, you can see that we've had movement off the lows. But for the most part, we continue to be in a choppy move. Now, the fact that we've gotten above the 200, if we could stay there, that would be bearish for the market. We had a couple of hanging man on Thursday and Friday, which might be preceding a correction and a pullback, perhaps at the minimum down to the 200, and if it breaks through that, maybe all the way down to the 50, in which case we'll get somewhat of a rally into the holiday season. The other thing that I might look at between the dollar and the VIX is the bonds. The bonds have been where so much money has gone into during this tough time in the market last year or two. And one can certainly see the bull market in bonds that started in mid-11 with a big move up, although it's had a pullback of late, certainly consistent with some of the volatility and weakness in the stock market. All right. Now, let's look at some of the indices. You can see where the let's look at gold and silver, and then we're going to look at the indices. Gold, as I said, dollar up is usually bad for gold. But gold is ranked number 5 for the week. So you can see that gold is pulling up, had a very profound pullback, almost down to the 200-day moving average. And now seems to be moving up, and now it's going to hit resistance up here at the 50. So it'll be interesting to see what gold does. In silver, someone said tonight that silver is going into a very bullish time of the year. Very similar picture, did pull down to the 200-day moving average, and my target would be up here at the 50. People wonder why I use moving averages and why they're so important, and so many people use them. Because they work. I mean, everybody's watching the same moving average, and I guess the herd moves the same way. So I guess maybe I should make my numbers a little different to try and figure it out before everybody else sees it. Now, you can see the market was weak all over. Let's look at a couple. Let's look at the Dow, the S&P, the NASDAQ, and the S&P 1500 and see where the strength is. So the Dow we know is a lovely 30 stocks, and gets a lot of attention for 30 stocks. It was down 2% in the last 5 days. And you can see, and you're going to see a pattern here, below the 200-day moving average, which is obviously bad. Decent volume on Friday and a doji. So, had the opportunity tonight to listen to a little bit to George Lee, just a brilliant guy. Kind of rivals Ian, frankly, in his knowledge base and his skills of delivering information. And he likes to look at green candle lows, dojis at a low, and here you have a potential reversal sign on the Dow Jones. If we take a look at the NASDAQ, picture looks very similar, sort of a inverted hammerish looking pattern, which perhaps could be also a reversal sign. Everything is red, consistent with the pullback we've had. And this has been a pretty profound pullback. And one of the nice things about HTSI is if I go to the high, to the low, and I'm not good at drawing lines, so what you have is almost a 10% drop over 33 days. Obviously, we've pulled up from the bottom, and you can see that red candlestick high was the beginning of the end of this last run-up into September. So NASDAQ weak, below the 200-day moving average. If we look at the Russell, for example, again, the similar picture, below the 200-day moving average with the green candle, and a doji, again, perhaps signaling a potential reversal from oversold characteristics. And then the S&P 500, predominantly our stocks, a little bit healthier, where you're getting that inverted hammer-ish looking signal, sitting right on top of the 200-day moving average, which has been a site of reversal in the past. So your indices are suggesting to me a potential for a bounce, but we still have a lot of bad things out there, and a lot of news can really, we may get a head fake and keep going down, but we're clearly at a place where the line in the sand is drawn. Ian had a great blog tonight. We either bounce from here or we're going to feel some major pain. You might even expect a target down here to about 1280, which is a 100-point drop on the S&P 500, if we don't bounce from here back to where we held 6 months ago in June. I like to look at the S&P 1500 to finish, because the S&P 1500 is a collection of small in the S&P 600, mid in the 400, and large in the 500. It gives me a great picture of the market as a whole, and you can see how the 50-day acted as, well, first it acted as resistance, and then it was support. And when it broke through, it's now been resistance, one set, two sets, three times. Now we pull down to the 200. We have the inverted hammer, doji-looking candlestick there, but a green candle low, again, perhaps setting up for a bounce. So as I look at the markets, I would say they're weak. We've had a sell-off as much as 10%. I see a lot of signs that we're due for a bounce, but that doesn't mean Mr. Market has to agree with what I see. I often look at confirming this in Elder. Here let's take a look at the S&P 500. All right, and so the Elder has a lot of other tools in it, but Elder typically you expect it to run in between the envelope. He does a thing called the impulse release, where it can be red, green, or blue. You can buy on green, you can sell on red, you can do either or hold on blue. He gives you the Elder impulse release, which is the next level up, which is actually looking at the weekly bars. You can see the fourth one was green here. Actually, this is the same one, I'm sorry. This is the impulse here. He looks for MACD divergences, and potentially we got a divergence setting up here, but probably too early to say that on the histogram. But the red on the S&P 500, although below the lower limits, we'll expect a bounce. Weekly, still in the mid-tier. There's a 13 and 11 on the mid-tier. And then on the monthly, it's still blue. So again, even here, the S&P 500 looks quite weak, and it looks like it's at a place where you would expect it to bounce as it gets far below the envelope. Next thing I like to look at are industry groups to get an idea where the strength and the weakness is. Now, I use three views, and I'll briefly tell you about them. Well, I use a lot more than three, but for the purpose of my webinars, I use three. The top-down I use when I look at separating out indices. It's not fast. It looks at 1 day, 5 days, and 2 or 3 weeks with the Elder 13-day moving average. So it's all technical, which means all price and volume, but it is not short. It's much longer look than I might want to have. It's great, though, for looking at index performance over a period of time. For stocks, I want to look at balance, fundamentals, and technicals, so I usually use a scorecard index. And you'll see mine saying scorecard, no index, because I put on a $5, $150,000 and no index filter on it. And then I also like to use the 2-day force, which tells me the price volume plotted. It plots price times volume, and it's the change in price from yesterday times volume plotted daily with a 2-day exponential moving average. So it's very short, 2-day exponential. It's impacted by big price changes and big volume changes. And when I want to look at what's moving right now, I like to go look at the force up, 2D EMA up. So one thing I didn't point out was under top down you have 145 groups. As soon as I look at those that are up, I see that there's 12 that are up, and there are a lot more that are down. I'll talk about home builders at some point. It's funny, this looks a little different than the last time I looked today, but I certainly, yeah, it's interesting. I must have done an update since I looked at it before. Sometimes I screw up, and when I screw up, I forget to record it, and I get to do the webinar twice. So strength is in biotech, and I'm going to take a few seconds here and point a few things out. So force up, 2-day EMA up, Arena Pharmaceuticals at the top. Now, a big company, they have an obesity pill that should be worth a lot of money that recently got approved. However, they have a marketing relationship with a Japanese company, Eisai, and it remains to be seen whether or not it's very profitable for them. They pull back not quite to the 200-day moving average. Big kahuna volume come in. I believe they had their earnings report come out, but this is a place where I like to get involved. I might wait till it breaks above the 50, or at least gets higher than the high of the day on Friday, but it looks like we have a clear-cut reversal here in a stock that we open up the fundamentals. What I like about the stock is that it's starting to make money going forward. So potential up here, and this is the stock that, again, it's got its drug on the market. One of its competitors, I think it's Vivus, had some bad reports because they're not selling as much as they thought. You've seen the stock has been up to 14, and I think to get the stock back up to 12 is certainly possible. And for disclosure's sake, I do have a holding in this one. That was the top-rated one. Alexion, what I panned a few times as being overpriced. Well, now I'm going to probably point it out as being underpriced. Huge multiple. This is not a cheap stock. Even at this price, it's not a cheap stock. And you can see the multiple is still 54, but it used to be quite a bit higher. And you can see we've had a nice pullback, rounded bottom starting, although half of a rounded bottom. Breaks above the exponential moving average. It could be setting up a nice move back, perhaps as far up to the 50-day moving average for a retest. Great earnings per share growth, no generic competition for decades, has a great product, small market, but great pricing opportunity. And I always liked this stock, and we talked about it being a big leader on the last run. It's got to get back above the 50 to be a leader again someday, but I do think it's in a position now where it's likely to bounce. Here's probably my favorite setup of the weekend. This is Affimax, and one that I'd be willing, or not willing, we'll probably buy back into. I owned the stock for a while. I knew about the company because it's in my field of hematology and oncology. It had a beautiful run-up. In fact, if you look at a weekly, you'll see what a beautiful run-up looks like. It was basically trading at $3, and then it had an approval, and then a very nice move up. And you can see it's had just a big weekly move. It's had a big pullback here, and both on a weekly and a daily, it's got a pocket pivot. Lots of volume came in. The momentum indicators on top turning green. Don't like the earnings picture, but it certainly looks like a buy to me. Now, there are a number of stocks that I have mentioned from time to time that I've said, buy these stocks when the market pulls back, because I think these will be winners going forward. And there's 4 of them right in a row that I want to point out to you. First one is not in that category, but it's another nice chart. It's NPS Pharmaceuticals. Pull back to the 50-day moving average, had a big kahuna, tons of volume. I'd want to know why and look up the news. But even though they don't make any money, this is a very bullish pattern, and you know where to set your stop. The next are the ones I was talking about. Onyx is one that I've been in and out of. 2 marketed products in the last few months, plus Nexavar long-standing. Great company, great potential. I look at the market caps, which is $4.8 billion. For the number of marketed products they have in their pipeline, I think this stock is very cheap, regardless of PEs. I would rather this would be sitting on a major moving average, but this looks like it might be ready to come back. And it's really pulled back to the congestion zone before it had its last run. And I'll be looking to get into this if it trades above the high of Friday, which would be right at the 8-day exponential moving average, which people know from prior webinars as a place I like to buy. Medivation, like Alexion, has been a big leader on the recent bull market, or bull rally. Pull back to the 200-day moving average. Looks like a great place to get into this stock. It too doesn't make money. It just had a monster approval in prostate cancer, and is certainly not only going to have some profits coming in, revenue from that, but is also a big takeover candidate, most likely to be acquired by Astellas because they're the partner on the prostate cancer drug. And Magenta on a number of interesting products on the market with multiple partnerships. And these are stocks that I look to accumulate on pullbacks. And this has had a pullback of about 25 points, 28 points, now trading at about 140. Huge earnings per share growth, trades at a high multiple, but a multiple that's very small compared to its growth rate. Then the last one of the little tiddlers, or not so little tiddlers in price, but in volume that I like, is Ariad. And because they've got a drug that's likely to be approved soon, and like the others, it's had a pretty profound pullback, and I've been looking for evidence that the stock's going to start to run again. So that's biotech, and probably more than you wanted to hear about biotech. Let's go backwards. Whoops. I did that wrong. No worries. Go back here to computer hardware, change index groups, 3D systems, and crypto thing. Here's that's another pullback at echelon. Here is 3D systems. This is a highly ranked group. It's got nice earnings per share growth, trades at a multiple about equal to its growth rate, pulled back deeper, undercut the 50, is above the 50, now above the 8 exponential, and moving again with a pocket pivot on Thursday. And the other leader is Cray. Cray has gone sideways for quite some time. I actually have bought some long-term calls in it because it had not much intrinsic value, and very little volatility in the options. And one can see that the stock had a nice takeoff off the 50-day on earnings with volume and a big kahuna. It'll be interesting to see if the stock goes anywhere. You can see everything start to turn green as well, the momentum indicators. So have a position in this one, but I'm not sure what to expect because its earnings per share growth is less than superlative. All right, it's enough of these guys. Let's go backwards. Communications equipment. Can you imagine research in motion? I'm trying to see if any of these came up to me as anything special when I did my earlier look-see. Take a look at Qualcomm. And I remember the days on CNBC when they would yell, Qualcomm. So Qualcomm, I mean, I don't buy stocks that look like this. It's sort of oscillating, a lot of chop, nothing really exciting, although it did break above the 200-day moving average, test it, and then get back above it on Friday. Interesting stock. I mean, this was a huge gap up on Thursday, so even though it looks like a bearish candlestick closing near the low of the day, it did open up on Friday and get above both the 50 and the 200. Everything has turned green. It trades at a multiple of 19, 1.6% dividend. Who knows? Maybe this is a stock that's getting ready to be the Qualcomm of days of yesterday. They must be in a lot of new phones. Some of the Androids, etc. that are coming up. And, you know, it's in somewhat of an uptrend, I guess. I'm not that excited by this stock. And I guess BlackBerry 10 real. Yeah, enough. Below the 200-day moving average. It's not in an uptrend. Interesting, but I'm not interested. Go back. Pharmaceuticals, this thing here is you can pick up some stocks that pay nice dividends on a substantial pullback. And one you might want to look at is Abbott Laboratories. These are the apps pulled back almost to the 200 moving average. Makes money, earnings rates not growing much, but trades at a multiple of 12, 3.1% dividend. This is one of those stocks that I like to pick up on pullbacks. Warner Chicot has been a stock that people love to hate, but they upgraded some earnings. You know, hard to buy this stock. It's below the 200-day moving average. You know, this is actually a nice picture here, so I'm going to talk about it. When the stock was doing well on a big run-up, you had the 8-day exponential on top of the 17-day simple, on top of the 50-day simple, and on top of the 200. That's a bull. The bear case was the 200 on top of the 50, on top of the 17, on top of the 8. So it would have a long way of healing to go, and I don't have that much time left. Hotel Resort Publishing. To be honest, I didn't find a whole lot here that I liked a whole bunch. Let's take a look at what's not working. Let's look at a couple of them. So the first one that's not working was home building, and yeah, I saw this. KB Homes, BHH and DHI Horton have earnings out tomorrow. So if they beat earnings substantially, then they'll have a chance of turning around the sector. If not, it could be a long day, a long couple of days for this sector and some of the stocks that may have done well off the sector. This is typical of what we're seeing. Despite great earnings per share growth, a couple of bad days and a pullback to the 50-day moving average, something that was probably necessary for this group who've been big leaders for some years. Key Homes, you're going to see similar patterns as far as the deeper pullback, if I remember correctly, got below the 50. And our Horton DHI that will report a good number for these guys, and Beazer probably puts these things back up and moving north. So home building was weak. Let's watch those earnings. One of the problems with Force is it puts so much power into the volume piece, and the volume on these diversified banks such as Bank of America and Chase are so ridiculously high that they're at the top, good or the bad, on the Force every time, just as a volume multiplier. And I've been somewhat bearish over the last couple of calls. They had a nice move, and now they've traded back below the 50-day moving average. You know, they had a good day on Friday. They actually closed up on Friday, sort of a spinning top, but maybe at this point that might be a bullish candlestick. I'm not too excited by these. Other weakness, oil, gas exploration, department stores. Semiconductors, we've been picking on these for a while, and one of my favorite stocks has been Intel ever since I've gotten a short stock when it broke below 200 average, and it just continues to look like crap. You know, a couple of things that I've talked on many webinars about how that 8-day exponential moving average keeps me in and out of trades. It is great support on the way up, and it's like a blanket on the way down of resistance. And you could see that, you know, we talked about shorting Intel back here, and Intel just had a continued drop 20% below that point. Now it's got these inverted hammers here. Maybe it's about hit a bottom. We shall see. So obviously a lot of weakness in the market. All right. What else do I want to do? So a couple of shortcuts that I might want to do if I was looking for stocks to potentially buy, if the markets go the right direction. I might go into the smart groups. Smart groups are a number of pre-planned searches that I have some favorites. I start with Best of Woodward and Brown. Let's make sure I got my scorecard, no index here. And these were, it's there's usually 10, which means 3 of the stocks were below my volume and on price. I like Eagle Material a lot. Let's take a look at this. This is a home building, benefiter. We'll check this out right now. Cement hydraulics, and what a beautiful lower left to upper right. It has not broken nearly as much as the home building stocks. It's got great earnings per share, trades at a multiple of 43 and pays a dinky dividend. One to like if we see positive earnings reports and a change in the sentiment on the home builders. So another thing that I like to do is that group inclusion filter. So if these are good stocks, and the stocks that, for example, that are in Morales and Catcher's pocket pivots are good stocks, then maybe if I look at a bunch of those groups that are good and take the top 10 stocks in the group, I might be able to find some 10 stocks to look at for tomorrow. So let's go to Tools, actually go to Designer, Tools, Group Inclusion Report. So again, the hypothesis is if I have stocks that are in a number of these different good groups, that might mean it's a good stock. So I'm going to look at pocket pivots, we look at best criteria, ERC 240, growth stocks, HGS 100, leaders, quarterly EPS acceleration, and strong EPS. We're going to make a group from the report. We're going to call it AAAA 11. This is 12 now, .12 webinar now. And I want to see the top 10 stocks, not the top 60. So this takes just a couple of minutes, and it gives me the top 60s, top 10 rather. Now this is going to list all of them, and then I'll show you how I find the top 10. So if these are all the stocks that were in multiple groups, we'll look at Stewart, I liked a lot. And let's just take a quick look at it. I like Kimball. I already showed you Eagle. Fleet Core is another leader. But what it'll open up now is if I go into my user groups, AA 1112 webinar, there's my 1, 2, 3, 4, 5, 6, 9 stocks, which means there must have been a drop in the number of boxes at this point. So let's go take a look at these. Let's rank them on the basis of scorecard, and let's just quickly take a look at this. I'm going to say good night. It's 1 o'clock Eastern Time, PST, and time for me to go to sleep. I already talked about Eagle, beautiful chart, great earnings per share growth. Hold on until you see the numbers for Beazer and Peach Horton. Shift Nutrition, it's a buyout, skip it. Alkanese is a small biotech stock. If you look at it on the weekly, it makes some wide swings, very loose. It's in an uptrend. On the weekly, everything is green. On the daily, everything is green. It doesn't work for me, except it's got gigantic earnings per share growth, trades at a multiple that's equal to the earnings per share growth. Something to watch. I will pass. Kimball's chart. And here's a chart that's been going sideways for a while. You notice how it got to the top of the high jump bar and had a modest correction sideways. And if I can get a kahuna or some big volume come in here, I might be a buyer. I love the earnings per share growth. I look back here, I see its PE is 25, pays 1.5% dividend, and it's in office furniture. So it's got a squeeze with the 8, the 17, and the 50 all coming together. Not a very expensive stock, and I'm very impressed with its earnings per share. Storage Services is a king of earnings per share growth. You can see the 200 plus. It has a multiple PE of 12.2% dividend. Something's got to give. If it just hits those numbers, you'll see a massive increase in the stock price. It pulled back from hitting the high. I think this stock runs on its fundamentals. I need to learn a lot more about them. But here's a stock where it's had clearly a turnaround play, great O score. I'm very interested in this stock. Taser, we talked about this at the meeting, had a big move up, going sideways, waiting for the moving averages to catch up, something to watch. Don't know enough about what's going on there. Stratasys has been a leader in the, it's a computer hardware stock. Doesn't look like much here. If I put on a week, it looks a whole lot nicer, but it's getting into an area of chop and congestion and not a whole lot of excitement. And Lamar Advertising, nice lower left, upper right, a couple of pocket pivots and a kahuna on Wednesday. I don't like the earnings per share. They're all over the place. I would probably skip this one, although by chart perspective, not fundamentals, it looks good. Lennar, no surprise, as a home builder that pulled back. If we get good earnings, I've already said it before, these things will go again, and that's about it. Other things that I do, one of the things that was leaders this week were those top Robert Bongo stocks. So I always like to look at those, and that's just a view that I have, and I'm going to take a look at that right now. And so if I go into all stocks, and I go into top Robert Bongos, and let's just look at what's in this. So the filter is best fundies. So it's looking at close over 5, 100,000 shares, EPS rank over 40, relative strength over 90, EPS change over year over year 60%, revenue growing 40%, and it's positive revenue growth quarter to quarter. It's above its 9-day moving average, and it's a common stock, so those are good fundamentals. And I'm ranking it using the Bongo one-step, which is white body, volume, high volume, fundamentals with good revenue per share, Wilder RSI, earnings per price trailing 12 months, industry, group, Bollinger percent B, some technical stuff with force, accumulation distribution. O-score has some earnings and revenue in it, and EPS growth. So a mixture of fundamentals and technicals put on the best fundies. And what we get here are, we'll just look at these, see what's new here. And these are the shortcuts that I might buy or sell today. So 3D Systems we've seen. CVR is an interesting refiner-like company that uses, also produces nitrates and does some farming stuff. And I thought they did some ethanol plays. Nice pullback towards a squeeze here at the 50, 17, and 8-day exponentials coming together. Might be interesting to see which way it jumps. You see it's got some big earnings coming into the stock, trades at a multiple of 5.6, does not pay a dividend. Flags, this is one I saw earlier today, huge move. Look at this earnings per share. So that's, I think, hits its quarters at $1, that's $2.14, $3.50, $5 in 4 quarters. It trades at 16.5, growing at a huge growth rate. Something's wrong here. I don't understand this company. PE of 12.8 does not pay a dividend. But boy, if it makes its numbers, this stock is way undervalued unless there's some really big fleas hanging on to it that I'm unaware of. Do your homework. I'll do mine. Prestige Band has been a big mover. It's had a big gap up, or a big move up, I believe, on earnings. Pulled back, sort of setting up a high type flag, and I'd be looking for it to run again another 4 points or so. Repligen, I don't know this company. Pulled back to the 200, gapped up. It's got to get above the 50 for me to be interested. Great earnings per share growth. Multiple 61, so the earnings per share are much bigger than the multiple. And Mellanox is a tough one. This is a stock that up until last earnings report, which was here, gapped up on earnings in the past several times. You look at all the other technology stocks that we've talked about, the earnings per share story here is outstanding. It trades at a multiple of 34, doesn't pay a dividend. I think the issue here is it's got a differentiated semiconductor in how long before they have competition, which kills pricing power and revenue growth. And I believe in Tesora, I don't know comments there, and Acadia, not that interesting. I am getting tired, so I think I'm going to call it a night. Thank you so much for participating tonight. Trade the market you get, not the market you think you should get. I've showed you a couple of different ways. I look at my stocks, and these are the ones that I put on my buy list. I look at breakout EPS all-star stocks that are getting above their prior high with good earnings. We saw 3D Systems and Cray. You might take a look at Thor. Take a quick look at Thor. I'll look at two more things before we go. I'll probably find more. I keep saying before. Everybody knows I'm addicted to doing these things. So let's take a look at Thor. This is they make motor homes, so you wouldn't think they'd be doing a tough economy. They had great earnings per share. I don't want Thor Tech. Don't look at that one. My bad. Thor Industries, and you can see sort of high tide flag, and probably will run again. They raised estimates. Had some analysts come out very supportive of them in Winnebago. Celgene and tech stocks are not going to be very pretty from a charting perspective, where it pulled back to its 200. It's looking overnight that it might trade up as high as 75 tomorrow. They had another very positive data point on a drug that they acquired 18 months ago. It was a questionable acquisition in my limited mind. But boy, with this data, they got a recent approval in lung cancer, as well as now they may become the standard of care in cancer of the pancreas. That's a lot of patients, and it's a lot of wins for people. And they traded up over 75 in the after hours, so I'd expect a gap up on Celgene tomorrow. So something to take a look at. If it's a bad day, you might be able to get some cheap. Leaders extended are gone. These are things like Eagle, Stewart. They've had big runs already. Pullbacks ready to run. These are stocks like Affymax that have pulled back to support. We looked at that one as one of the examples of that. Pullbacks waiting for signal. Those are things that have had a big pullback, like Alexion we looked at. We looked at Mellanox. We looked at Regeneron. And I'd like to see whether it's volume, whether it's perhaps a kahuna, a pocket pivot, something that says these things are going to move. Quite a few in that category. And these are, lastly, some bottom fishing. First Solar, I don't know what's going on with First Solar. The reason why it's in my bottom fishing category, I'll just show you the chart, and then we're going to say night-night. And then I'm going to post this on YouTube and a few other places. FSLR. Looks like nothing. I agree. Broken above the 200-day and held. This is what's got me intrigued. Is this real? Made $1.27 last time. If those earnings are truly coming in, then maybe this stock is underpaid. So at this point, I'm really going to say goodnight. I'm not just going to pretend to say goodnight. You all have a great day trading, and it's been a pleasure having the opportunity to do these webinars, and I'll do it again the next couple of weeks. Thanks, everybody, and good night.